What's up everyone, this is Tony with JRNYcrypto. In this video we're going to be discussing more manipulation in the crypto markets. An article just released from JPMorgan now stating that Bitcoin may never rise above $40,000 again. Meanwhile, just a couple weeks ago they were saying Bitcoin was very bullish and could hit $145,000. So we're going to get into all this and discuss this and why I'm still bullish for the long term. Before we get started, I do appreciate if you guys like the video, subscribe to the channel if you haven't already, and hit the bell to be notified when I release new videos. As you guys know, YouTube gatekeeps crypto content, so if you want to be notified, definitely hit the bell because some of this information is very time sensitive. So before we get started, I do want to remind you guys that there's only around 30 hours left in the crypto giveaway I'm doing. So if you guys do want to enter in this, it's very simple and you can get multiple entries to increase your odds of winning. Simply go to the Linktree link, and the top link here will take you to the crypto giveaway contest. As you guys can see, 33 hours left up here and lots of ways to enter to get extra entries. And there's going to be a total of 13 winners, so pretty good odds of winning. I will be launching an even bigger giveaway after this one is done, and I will be selecting winners in a video that I'll be posting on Twitter. I'll also be posting more entries here at the bottom tonight, so you can increase your odds of winning as well. All right guys, so just a couple hours ago, entrepreneur.com posted this article about JPMorgan alerting people that Bitcoin may never go above $40,000 again. Meanwhile, they were just stating that Bitcoin is super bullish just a couple weeks ago and that it could pass $140,000. I think there's definitely some manipulation at play. So to dig in deeper in this article here, to see why they're stating this. So on January 7th, Bitcoin broke the barrier of $40,000, and in the following days, it went up to $42,000. In this context, JPMorgan specialists projected that the cryptocurrency could reach $146,000 per Bitcoin and would compete with gold. Of course, the world of cryptocurrencies is a roller coaster. Just a few days after the prediction on January 11th, Bitcoin fell below $30,000. Since then, the digital currency has been oscillating between $31,000 and $35,000. A post from Bitcoin here. In the past 24 hours, Bitcoin has crashed more than $4,500, or about 15%. Less than a year ago, Bitcoin was trading for less than $4,500 per coin. So it just shows you how volatile and how much these prices can fluctuate in a short period of time. 1 year later, and Bitcoin is dropping $4,500. Or just 15%, when a year before that, the price of Bitcoin was below $4,000 per Bitcoin. So there's a lot of major factors that come into play here, which we will be discussing on why Bitcoin is very bullish for the long term. But with such a huge price rise in the short term, it's going to be very volatile, and any bad news that breaks could definitely send Bitcoin down very quickly. For the first time ever recently, we saw Bitcoin crash over $10,000 in a single 24-hour period of time. So faced with this scenario, the JPMorgan team of strategists greatly lowered their expectations for Bitcoin. According to new estimates, weak demand and the possibility of investors withdrawing their profits prevents Bitcoin from returning to the value of 2 weeks ago. This is just ridiculous that they would go while everything is extremely bullish and give an extremely high prediction of over not only $100,000 but $146,000, and then just 2 weeks later claiming that Bitcoin may never pass $40,000 again. So they're saying that analysts believe the flow of institutional resources to Grayscale Bitcoin Trust is not strong enough for Bitcoin to exceed $40,000. Of course not in the short term, but we have to keep in mind all the inflation that hasn't even started yet. There's going to be more stimulus packages. There's a number of other reasons cryptocurrencies are going to keep climbing in demand and keep climbing in price as well. And Grayscale Bitcoin Trust is not the only institutional company out there buying Bitcoin, which I will show you guys another new institutional company getting into crypto. I think over 2021, it's going to become a trend to see more and more institutions starting to buy up Bitcoin and other cryptocurrencies, and a lot of them are just waiting on the sidelines right now because things are so volatile. When they see Bitcoin crash over $10,000 in a 24-hour period, they know they don't want to get in because we're at a peak, and really we could crash back to $25,000 even, which is still much higher than its all-time high from the previous bull run. So I wouldn't be surprised to see JPMorgan jump back with another bullish prediction if Bitcoin does start moving back upwards of $40,000. In the short term though, things can be very volatile, which is why I invest for the long term. Doing dollar cost averaging. If you guys want to see how I invest for long-term success, definitely check out this video here on how I invest in crypto for long-term success and my altered method of dollar cost averaging. So according to Glassnode, the Bitcoin experiencing greater liquidity depletion for years. This is partly because funds are being withdrawn from exchanges, but also because cryptocurrencies are continually moving towards the holders. He adds that only in the last 30 days, around 270,000 Bitcoins have been transferred to entities considered as savers. So these are wallets that people are holding Bitcoin long term. Basically, they're buying up Bitcoin on exchanges, sending it out to their personal wallets for long-term holding, and that's at an all-time high. And we do have a liquidity depletion, which means there's much lower supply in the markets while there's much higher demand at the same time. This is why we quickly doubled from $20,000 Bitcoin up to $41,000 Bitcoin very quickly. So a market correction is healthy, and the higher we would have went without a correction, the bigger the crash would have been, and the more bad news that would have generated. Imagine if Bitcoin fell from $100,000 to $50,000 in a 24-hour period. How much bad news that would be, and how many people would think that crypto is a scam because they bought the peak like that and it fell 50% overnight. So basic supply and demand economics shows that Bitcoin should continue rising as long as demand doesn't crash, which I don't think it will, because Bitcoin is a hedge against inflation. And there's going to be more and more demand coming to hold cryptocurrencies, especially with more stimulus packages coming and all kinds of other good news as well. For instance, BlackRock getting into cryptocurrencies here. So we had the news of BlackRock getting in, and then a day later, all kinds of FUD came out and the markets crashed the day after that. So I'm still very bullish on cryptocurrencies in general throughout 2021. I think demand will continue rising, and more Bitcoin and other cryptocurrencies will continue being bought up and taken out of circulation for long-term holding, which creates a new resistance level. So here's that article published on January 5th. JPMorgan says Bitcoin could rise to $146,000 long-term as it competes with gold. So just a couple weeks later, they changed their sentiment to tripling up from $50,000 to not even ever passing $40,000 again. This is just ridiculous in my opinion. If their specialists were actually specialists, then they would look at the history of Bitcoin and see that historically there's always been higher lows, and we will continue rising, especially with this amount of inflation coming. So another bad article from JPMorgan today, Bitcoin is a risk rather than safe asset. So they're really pushing out some very bearish news, and I definitely think this is some manipulation at play. Either that, or they're just trying to cover themselves in case Bitcoin does crash. They don't want to be at blame when everyone was buying at $40,000 and then it crashes back to $25,000, which is definitely a possibility in the short term. But what we got to look at is Bitcoin as a long-term investment, and this is how people are most successful. Buying by doing dollar cost averaging over time and buying the dips. Most of these people are very successful long term. Don't expect to jump in Bitcoin at a peak price where it's basically doubled up from its previous all-time high and then continue making profits on that in just a couple weeks period of time. There's always going to be dips. There's always going to be bad news, especially because we have new people coming into office, new regulations coming to play, and a lot of governments fighting cryptocurrencies as well. So something else very important here is Bitcoin and Google Trends. This is worldwide for the past 30 days. So when JPMorgan made that statement on January 5th, we were at a level of 52. And currently we are at a slight recovery and we're at 55. So the Google Trend traffic is actually higher than when JPMorgan made that first prediction of $146,000 Bitcoin. And then the demand continued rising, and then it fell off here with that big Bitcoin dip. So I do think things are going to start picking up again, especially because the focus isn't on politics as much anymore. So we have to keep in mind it is very possible there is a small pullback before we start moving upwards again. A lot of traders are saying Ethereum may see a rinse pullback after breaking its 2-year high. So if you're holding cryptocurrencies for the long term, you can use these small pullbacks and dips as a buying opportunity to increase your stack. By doing this and buying all the dips, you lower your buy-in average, and this definitely helps you make more profit over time. So if you're just buying all at once, you definitely have a much higher risk of having a much higher buy-in price, especially buying at a peak when FOMO is at a peak as well. As Warren Buffett says, be greedy when others are being fearful and be fearful when others are being greedy. This helps you sell the tops and buy the bottoms more, which makes for a great trader in any markets. So some other bullish news here we have to look at. So legendary investor Jeremy Grantham warned Biden's $1.9 trillion stimulus plan would inflate the stock market bubble in a recent interview. So this is going to cause inflation and inflate all the other markets, not only the stock market, but also the crypto market and many other assets as well. Stock market is pretty flat right now, even though the crypto markets have been pretty volatile. So another major thing here is PayPal is going to be offering crypto payments starting in 2021. They confirmed this at the end of 2020, saying they would launch crypto payments in by the end of Q1, which would be by the end of March, which will enable millions of merchants on PayPal to start accepting cryptos as payment, which is just huge. This is going to add so much volume to cryptocurrencies that it's never had before. So I really think PayPal is going to be a major player in crypto, even though by buying cryptocurrency in there, you can't send your crypto off and you're not actually owning it since you don't own the private keys. But regardless, this is very important for the progress of cryptocurrencies. We need cryptos to be adopted in as many places as possible and add as much volume as possible and as much utility as possible as well. This is very important. I think PayPal is really going to be one of the starting points when merchants do start accepting payments. Imagine how many announcements we're going to get of millions of merchants actually accepting Bitcoin and Ethereum as payment on their online stores for the first time ever. So more institutional adoption as Marathon Patent Group purchases $150 million in Bitcoin today. So we do still have institutions getting in, even though the markets are volatile. A lot of institutions are waiting on the sidelines though for things to level out. They do want to get a better entry point, and with things being so volatile, it's very high risk to institutions right now. But in general, institutions are taking major interest in cryptocurrencies for the first time ever. So that's it for this video. I will be doing another video later today. So I'm very interested to hear what you think about JPMorgan stating Bitcoin may never go above $40,000 again. Please comment below. Let me know what you think. If you do appreciate my content, a free way to support the channel is like the video, comment below, and share this video on social media or with friends and family. Everything helps the channel grow, which does allow me to make more content, so I do appreciate that. Again, thank you guys so much for watching, and I'll see you guys in the next video.